Welcome to The Lone Cure, the internet corner where you learn lifelong lessons in minutes of just listening. Today's summary is a great read, Crash Landing, The Inside Story by Liz Hoffman. She's a sharp reporter from the Wall Street Journal.
That's right. The book came out in 2023, published by Crown. It's really quite the account.
Yeah, and if this glimpse into Hoffman's work intrigues you, we definitely recommend picking up the full book. Her reporting is just incredibly detailed.
Absolutely worth it. And hey, if you learned something today, and we're pretty sure you will, do us a favor, like and subscribe. It helps us bring you more deep dives like this one.
So today we're plunging into Hoffman's story of how the COVID-19 pandemic just slammed into the corporate world, the economy, everything, really.
We'll look at those initial reactions, the disbelief almost,
Hmm.
and the rapid shifts companies had to make.
And some of the really surprising consequences that rippled out. Our goal here is to pull out the key insights and figure out what they mean for you, navigating, well, this constantly changing world.
Okay, let's dive in.
All right, so Hoffman kicks things off, setting the scene in what she calls the before times, this period of pre-pandemic hubris. And she starts us off in Davos, January 2020.
Right, the World Economic Forum. And looking back now, it feels like a different era entirely.
It really does. You've got the global elite there, right? And
Right.
what's their big focus?
Global warming, mostly, the long-term stuff. Hoffman lists the names Mnuchin, Ross, Khosrowshahi, Sandberg, Wirth, Ramadi, Dyes, Moyles.
Big names, all talking about climate change.
Exactly. But even as they're deep in those conversations, you've got these rumblings out of China, a new virus.
But in Davos, the concerns seem, well, pretty minimal.
That's the disconnect, Hoffman points out. News was trickling in from Wuhan, but the atmosphere there was still very much status quo.
Yeah, she mentions the CEO of Novartis even going on CNBC saying all the right things are happening.
Right. And the social scene was apparently buzzing. Jason Derulo performing, David Solomon, the Goldman CEO, DJing.
It's almost surreal to think about now, that level of normalcy.
But Hoffman adds this interesting wrinkle about Mnuchin, the Treasury Secretary then.
Oh, yeah. What was that?
Well, publicly on CNBC, he was all about tax cuts, downplaying the virus. But Hoffman reports that privately, like over dinner, he was actually voicing some concerns.
Huh. So a bit of a disconnect there, too.
Definitely. It kind of shows that gap between the public face and maybe some private anxieties starting to creep in.
And then you have that Jamie Dimon quote. Hoffman includes, "Capitalism is the greatest thing that ever happened to mankind." That really sums up the mood, doesn't it?
It perfectly captures that pre-pandemic optimism, that almost unshakable confidence in the system after the 2008 recovery.
Corporate profits were high, white-collar incomes rising.
Right.
Seemed like smooth sailing.
On the surface, maybe. But Hoffman digs into what she calls the split screen of the economy. And this feels really important.
Explain that a bit.
Well, you had these thriving corporations, yes. But at the same time, a huge chunk of working adults were on Medicaid or food stamps, even with full-time jobs.
Right. Jobs just weren't paying enough.
Exactly. And profits were flowing more to shareholders than workers. Plus the rise of the gig economy. Lots of people without traditional benefits, security.
So vulnerable.
Very. Joseph Stiglitz's quote fits perfectly here. "We built an economy with no shock absorbers." Makes you think, right?
It really does. An economy maybe not as resilient as it looked. And some weird market stuff was hiding that, too.
Yeah, Hoffman points out that in 2019, basically everything was going up: stocks, bonds, gold.
Which is unusual.
Very. Mostly fueled by the Fed keeping interest rates super low for years after the '08 crisis. Easy money sloshing around.
Okay, so that long bull market, the easy money,
Yeah.
it led to complacency.
Hoffman argues yes. And risky corporate behavior. Companies felt invincible.
Like what kind of behavior?
Well, massive stock buybacks, for one. She uses the airlines as an example, spending something like 96% of their free cash flow buying back stock.
Wow, 96%. Not leaving much for a rainy day.
Precisely. Plus, taking on more debt, less focus on holding cash reserves. There's this great quote: "The global economy was teetering on a precipice, but everyone was simply admiring the view."
Chilling, actually. And Hoffman says that Davos meeting would soon seem, well, ridiculous.
Yeah. That confidence just evaporated incredibly quickly when the pandemic hit, exposing all those cracks.
Okay, so moving on from that pre-pandemic scene, Hoffman looks at the early signs and missed opportunities. She starts with Chris Nassetta, the Hilton CEO, back in December 2019.
Right. He was having a great year. Hilton hitting its 100th anniversary, opening tons of hotels, stock price at a high.
Riding that global travel boom.
Exactly. Even launching a new brand, Tempo, aimed at younger travelers, just full steam ahead, really showing that belief in continued growth, fueled by that easy money environment.
But at the same time, there was this little report out of Hong Kong.
Yeah, a little noticed report about pneumonia cases from an unknown cause, one of those very first signals easily missed when everything else looks rosy.
Hindsight is 2020, I guess.
Mm-hmm.
Then she jumps to February 2020. Morgan Stanley buying E-Trade.
Yeah, Hoffman frames that as another sign of the post-2008 recovery. A huge deal for a bank back then.
Right, showing how far they'd come under James Gorman.
But even Gorman, amidst the success, apparently gave a little warning. Reminded people about 2008 how things can change fast, like a little note of caution.
So the memory of the last crisis was still there, somewhere.
Seems like it. Hoffman also mentions Jim Hackett and Bill Ford just enjoying their Christmas break, totally unaware of what was coming.
Just emphasizes that normalcy right before the cliff edge.
And then the reminder. January 15th, the first reported U.S. case in Washington state.
The first real crack, like you said,
Yeah.
didn't cause mass panic yet, but it was here.
Exactly.
Okay, so we go from those early signs to the big one arrives. Hoffman starts this part with James Gorman again, this time in Saudi Arabia in early March.
Yeah, it's striking. The first U.S. COVID death had already happened, but he hadn't even considered canceling his trip. Shows that initial underestimation, right?
Life just carrying on for many at the top. And Hoffman explains why this virus was such a nightmare to contain. She calls it a virological sweet spot.
It's a good term. It was infectious before symptoms showed up, spread easily through the air, close contact, and the mortality rate, maybe around 5.25% early on, was significant, but not so high that it stopped people moving around immediately.
So people could spread it without knowing they were sick.
Exactly. Made containment incredibly difficult. That combination was just perfect for spreading rapidly.
A perfect storm. Hoffman brings it down to the personal level, too, with Gorman's last sort of normal night out in NYC.
Yeah, dinner at Elio's becomes this little symbol of the before times.
Then she shifts focus to Delta's CEO, Ed Bastian. He was worried about China early on.
Yeah, and his decision to cancel all China flights was a huge step, especially that early.
A bold move. Must have had big financial implications.
Oh, definitely. Hoffman notes his colleague Glenn Howenstein was initially hesitant, worried about the cost, losing their foothold there. Understandable concerns.
But Bastian pushed it through. Show some real foresight, maybe.
It does seem like a decisive move based on a gut feeling about how bad it could get, even with limited info, making a tough call.
As things started escalating, she described CEOs just scrambling.
Totally. Reworking plans on the fly, no playbook for this. Long-term strategy just went out the window. Constant reaction mode.
And amidst all that chaos, there's this little side story about Ford's head of security, Mary Fleury, and a secret management change.
Right. Hackett planning his retirement, lining up Jim Farley, just shows that normal corporate life, the usual maneuvering, was still happening in the background, even as this massive crisis was unfolding. Kind of a weird juxtaposition.
Definitely. Okay, so then comes the panic and initial reactions. Hoffman leads with Airbnb's Brian Chesky and his realization the company was actually shrinking.
Yeah, in Silicon Valley, shrinking is like a forbidden word. It's all about relentless growth.
So for Chesky to admit that, it must have been a massive shock. Shows the immediate hit to travel.
Completely shattered that growth narrative. Makes you realize how fast things turned, even for those tech giants.
And then there's Bill Ackman. He saw the writing on the wall pretty early, didn't he, from his Manhattan penthouse?
He did. His ultimate bear thesis was incredibly bleak. Saw the China numbers, worried about Fashion Week spreading it globally, figured U.S. lockdowns would be tough.
And he saw market complacency.
Big time. Predicted a huge downturn, job losses, maybe even civil unrest. A really stark early warning.
And he put his money where his mouth was, selling Hilton and Berkshire Hathaway.
Yeah, his logic was hospitality gets hammered immediately, Berkshire strong, but he wanted pure cash, liquidity for the storm he saw coming.
And then the big bet, those credit default swaps, Hoffman calls them amazing instruments. Break that down simply.
Okay, so think of them like insurance. You pay a premium, and if the company you insure defaults on its debt, you get a big payout.
So Ackman was betting companies would default because of the pandemic?
Exactly. He figured the economic fallout would be so bad, defaults would rise sharply. The swaps cost relatively little up front, but the potential payoff, if he was right, was massive. That's the asymmetric risk-reward. Big upside, limited downside if he was wrong.
A huge gamble on a disaster scenario. Meanwhile, back on Feb 25th, Nancy Messonnier at the CDC gave that really blunt public warning.
That was a key moment, saying it wasn't if, but when it would spread here. Talking about school closures, business disruptions, a real wake-up call for many Americans.
And the market listened. Biggest point drop ever on Feb 27th. Even Fed Chair Powell couldn't stop it.
Nope. Powell tried to reassure, talked about evolving risks, but the sell-off was massive. Worst week since 2008. Showed the usual words weren't working anymore.
Panic was setting in. Then you had Jim Hackett at Ford with this idea of a voluntary corporate shutdown.
Yeah, pretty radical. Like, let's all just stop for 4 weeks, kill this thing.
But it didn't happen.
No. Josh Bolton at the Business Roundtable pointed out the obvious who goes first. Competitive disadvantage. Hard to coordinate something like that voluntarily.
Makes sense. Then we see Doug Parker from American Airlines meeting with Mnuchin. That's unusual, right? An airline CEO and the Treasury Secretary.
Highly unusual. Signals just how dire things were getting for the airlines. A real emergency meeting.
And this led to that White House group forming, led by Andrew Ullman.
Right. Trying to monitor the economic effects, figure out a response, started as data gathering, quickly became about planning interventions.
And Treasury's first ideas were timely, targeted, and temporary.
Yeah, things like paid sick leave, delaying tax deadlines, pausing student loan interest, supporting markets, trying to cushion the blow without massive long-term changes.
Congress passed a couple of early bills fairly quickly, too.
The $8.3 billion one, then the Families First Act, early support for testing, sick leave, food aid, just the start, as Hoffman notes, of much bigger spending to come.
But even with all this brewing, the U.S. got its last good jobs report on March 6th. Kind of surreal.
Totally. Strong numbers from February, but a lagging indicator. Didn't help the market panic at all, like looking in the rearview mirror while driving off a cliff.
And Ackman, still watching everything, emailed Warren Buffett about the Berkshire meeting. Buffett's reply was pretty. Buffett.
Yeah, apparently just a folksy, calm reply. Didn't seem fazed by the pandemic risk for the meeting. Classic Buffett long-term view versus Ackman's immediate alarm.
Finally, Hoffman mentions SEC Chair Jay Clayton and NYSE President Stacey Cunningham getting worried about a full market meltdown. Talk about circuit breakers.
Right. They were seeing the extreme volatility as circuit breakers are automatic stops if the market drops too fast, trading halts for a bit.
Like hitting the brakes.
Exactly. To prevent a total free fall, give people a minute to breathe. The fact they were worried about needing them showed how bad it was, and trading volume was hitting records. Intense.
Okay, so the market is teetering. The market freezes, and the Fed acts. Hoffman starts with the NYSE COO, Michael Blogrund, arriving to a ghost town financial district.
Yeah, unsettling image. He was expecting a limit down that 7% drop, triggering the first circuit breaker halt, an emergency brake scenario.
And the Fed reacted. Big time. Emergency rate cut, biggest ever between meetings.
Huge move. Cut rates drastically, lowered the discount window rate for banks. Trying to pump liquidity in, make borrowing cheaper. Powell admitted it wouldn't stop the virus, but hoped it would boost the economy.
But even with that, people were spooked. Jeff Jacobs at Marathon Asset Management told banks to draw down credit lines immediately.
Yeah, basically saying, grab all the cash you can right now. Total uncertainty, prepare for the worst, make sure you have resources.
And this circles back to that vulnerability, companies prioritizing shareholders over cash reserves.
Exactly. The pandemic just laid it bare. Companies that chased buybacks and dividends instead of building buffers were suddenly incredibly exposed. No shock absorbers.
Delta is the stark example, burning $100 million a day by late March.
Unbelievable. Bastion having daily catch meetings, slashing costs, shows the desperate situation. They were refunding more than they were taking in negative net sales. Massive cash drain.
And it wasn't just airlines. Beth Hemmick at Goldman Sachs was worried about cash flowing out of banks too fast.
Right. It highlights how interconnected it all is. Rapid withdrawals, high transaction volume, market chaos, huge liquidity management challenges for banks.
No.
A real tightrope walk.
Meanwhile, Ackman's big bet was paying off, those credit default swaps.
Oh, yeah. Bond prices tanked, the value of his swaps soared, but he decided to start selling, lock in the profit.
Why sell if he was right?
Extreme volatility.
Yeah.
And he probably figured the Fed would step in even harder to prop up bonds, which could reverse his gains. Smart move to cash out when he did.
Then, March 11th. A day, everything seemed to happen. WHO declares a pandemic.
Tom Hanks tests positive.
National Guard in New Rochelle.
NBA season suspended.
Disney World, Broadway shut down.
And the official end of that 11-year bull market. Just a cascade of events that made it real for everyone.
A profound shift. Okay, next section. Desperate measures and glimmers of hope. Hospital CEOs pleading for tests.
They were flying blind. Couldn't manage patients, protect staff without knowing who had it. Desperate need for prioritized testing.
And you had this contrast. Bleak models from places like Johns Hopkins versus the administration playing down the risk.
Yeah, that created a lot of confusion. Hard to know how serious it really was with those mixed messages early on.
Interestingly, bank CEOs also pushed Trump on testing, framed it as essential for the economy.
They saw clearly no widespread testing, no way to avoid crippling shutdowns. It was about economic survival as much as public health.
Governor Cuomo in New York, right in the epicenter then, was meeting with CEOs directly.
Trying to understand the impact, what businesses needed, shows that need for public-private communication in a crisis.
And Hoffman reminds us this tiny virus took down the bull market that survived so much else.
It's incredible, isn't it? Economic shocks, wars, nothing stopped it like this pandemic did. Shows how unpredictable disruption can be.
Dr. Fauci, meanwhile, kept warning about how bad it was getting, the slow testing.
His voice became crucial for many, highlighting the severity and the gaps in the response, like testing and contact tracing.
And Mnuchin and Pelosi were negotiating that first big relief bill, government mobilizing.
Recognizing the need for serious federal help, despite the politics, that first big package was just the beginning.
Remember how airline CEOs said they didn't need aid just weeks before? That changed fast when transatlantic flights stopped.
Total game changer. Doug Parker at American suddenly realized the hole they were in. Shows how fast things deteriorated. Urgent need for aid became obvious.
The potential losses were staggering, $50 billion in just 3 months, potentially.
Just catastrophic numbers for the industry. An existential threat, really.
Which led to Trump's Oval Office address, announcing those travel restrictions. Big escalation.
Yeah, meant to slow the spread, but another massive blow to airlines and global travel. A major turning point.
And behind the scenes, Goldman's Stephen Scherr was trying to reassure D.C. about the bank's stability.
Even while internally they were worried about cash outflows, the chaos of shifting everyone to remote work overnight, huge pressure on financial institutions.
Plus more trading disputes, demands for collateral, sucking liquidity out.
Right. More volatility meant more arguments, more caution, tightening credit, added to the overall stress.
Then James Gorman himself tests positive, and the board didn't disclose it.
Yeah. Hoffman covers the internal debate, the succession planning talks, shows the personal impact, even at the top, and the tough calls companies faced about transparency versus stability.
And Trump's mixed messages on flying safety didn't help the airlines either.
Probably just added to the confusion, kept people away when the airlines desperately needed reassurance.
Which led to Helene Becker's warning. The industry was on the brink of collapse.
Just underscores the extreme danger they were in, potential bankruptcies, massive job losses looming.
But you also had advocates like Sarah Nelson from the Flight Attendants Union fighting hard for workers.
Absolutely crucial. Making sure employee needs furloughs, pay, safety were part of the conversation about bailouts. A powerful voice.
Regulators started pushing banks to stop buybacks, but let dividends continue. Interesting distinction.
Yeah, conserving capital by stopping buybacks seemed logical. Allowing dividends may be aimed at keeping some investor confidence, showing banks were still okay. A balancing act.
Hoffman touches on Jerome Powell leading the Fed through this.
Yeah, his background, trying to be bipartisan, probably helped. A mix of decisive action and careful communication in an unprecedented storm.
And even the U.S. Treasury market, the safest place, usually got disrupted.
That was alarming. When treasuries get shaky, it shows extreme stress everywhere. Panic was really widespread.
Which brings us to the Fed's huge move on March 15th. Massive bond buying, rates effectively to zero.
All cannons firing. Unprecedented intervention, sending a message. We'll do whatever it takes to stabilize markets, support the economy.
Goldman's reaction was like, smart, fast, but maybe not enough.
Exactly. Cautious optimism. Monetary policy helps financial conditions but can't fix the underlying health crisis or the demand collapse. Still huge uncertainty.
Airline CEOs, realizing how bad it was, started pushing for grants, not loans.
Didn't want more debt crushing them long term. Willing to accept conditions limits on buybacks, dividends, maintaining service for direct cash.
Beth Hammack at Goldman, still worried about liquidity, maybe needing to raise capital.
Shows the anxiety lingered even after the Fed acted. The cash strain was still a major concern for big banks. Fragility remained.
And then Airbnb got that investment from 6th Street and Silver Lake, but at a much lower valuation.
A crucial lifeline, but the lower price tag showed how badly the pandemic hit them, and they had to pivot fast to longer-term stays to survive. Showed adaptability.
Hoffman ends that part just stating the fact. An unprecedented rapid collapse in air travel demand just hammers home the scale of the shock.
Truly historic. Nothing like it's seen before in modern times.
Okay, next section title is intense. Hell is coming. Captures the urgency. Starts with Ackman feeling he had to warn the public.
Yeah, by March 18th, he saw the trajectory, the potential devastation, and felt a moral duty to sound the alarm publicly, push for stronger action.
And the NYSE trading floor, Hoffman describes it as a potential petri dish.
Right. Symbolic heart of capitalism, but also a crowded indoor space. Reluctance to close it, but positive tests forced their hand. Huge symbolic moment when it finally closed.
And the timing was tricky because of quad witching.
Yeah, that high-volume expiration day. Closing the floor then could have added even more chaos to an already volatile market, added complexity.
Hoffman really stresses the impossible choices executives faced. Public health, employee safety, corporate survival.
No easy answers. Constant flux, conflicting priorities, massive potential consequences, whatever they did, intense pressure.
That brief market bounce after the Fed's March 15th actions didn't last.
Nope. Reality set back in fast, showed the depth of the underlying economic fear, overshadowing the Fed's moves.
Doug Parker was talking to Mnuchin almost constantly. Airlines' outlook worsening. But Mnuchin favored loans, not grants.
Right. Mnuchin stressed it wasn't just airlines. The whole economy was seizing up, especially corporate bonds. Needed a broad response. Loans protected taxpayers, was his view, but created tension.
And the politics around the relief package were hardening.
Yeah, differing views on government's role, how to provide aid, made negotiations tough.
But then, a bright spot. Ford's Jim Bombick realizing car parts could make respirators Project Apollo.
Incredible story. Real ingenuity, pivoting factory lines, using engineering know-how to make desperately needed PPRs. A major contribution, showed adaptability under pressure.
Though the rollout of the PPP for small businesses was messy.
Very chaotic initially. Banks waiting for rules, businesses struggling to get funds. Huge program, vital lifeline, but lots of early problems and debate about fairness later.
The Fed then expanded its bond buying to include lower-rated corporate debt, a lifeline for companies like Ford.
Big move. Provided a backstop, ensured more companies could access funding, prevented a wider credit crunch. Crucial intervention.
Hackett even called Powell directly about Ford maybe needing aid, trying to save the dividend.
Shows how precarious things were, even for giants like Ford. That direct line to the Fed chair highlights the extraordinary times. Powell's reassurance was likely significant.
And Larry Fink at BlackRock pushed for the Fed to backstop the bond market. Shows the influence there.
Yeah, major asset managers have clout. Fink advocating for that robust Fed action was key to calming markets.
Ford then successfully sold junk bonds, a sign things were starting to thaw.
Exactly. Showed investors were willing to lend again, even to riskier companies. A sign the Fed's actions were working, credit markets stabilizing.
Chilton, meanwhile, dusting off pandemic plans, scrambling for PPE, hand sanitizer on the news became symbolic.
Reflected the whole hospitality industry challenged new protocols. Sourcing scarce PPE, basic hygiene becoming front-page news.
Governor Cuomo called Hackett directly, demanding 15,000 ventilators for New York.
Shows the desperation for equipment in hotspots and the huge challenge of scaling up complex medical device production, navigating FDA rules quickly.
There were even those back-channel efforts to get ventilator parts from China.
Right. Using global business connections, sometimes private channels, to fix supply chains for critical gear. Global problem needed creative solutions.
But then that awkward Trump visit to Ford's plant, downplaying masks. Bill Ford looked exasperated.
Yeah, highlighted that tension between White House messaging and what companies were actually doing for safety. Ford's reaction said a lot.
Okay, shifting gears. The shift to remote work and the uncertain future. David Solomon at Goldman frustrated with the slow return to office.
Yeah, his view that remote work had run amok really captures that tension. A clash between traditional office culture and the new reality many employees preferred.
And his background was in that hard-driving, face-to-face world of high-yield debt.
Probably shaped his strong belief in the need for physical presence, intense in-person collaboration.
Hoffman describes summer-fall 2020, still worried about the virus, childcare issues, but also people wanting to socialize, a weird mix.
Totally. Anxiety persisted, practical problems too, but also this human need for connection. Bustling parks, empty offices captured those contradictions.
And she notes past attempts to kill remote work at Yahoo, IBM hadn't fully stuck. Plus, companies had invested heavily in offices.
Suggests the remote trend had roots pre-pandemic. And those big office investments created inertia, a reason not to fully embrace remote long-term.
But then Airbnb bounces back remarkably fast. Bookings near pre-pandemic levels by July. IPO back on.
Surprising speed. Showed resilience, adaptability as travel shifted. Renewed confidence, big turnaround from the brink.
And Morgan Stanley's pitch for the IPO focused on survival. Space of one. Clever framing.
Very smart. In that environment, just surviving was the story. Highlighted Airbnb's resilience when others were failing. Great marketing.
Onto navigating the new reality. American Airlines adding flights in June, even with low passenger numbers. Bold move.
Calculated risk. Maybe hoping for a rebound, needing revenue, trying to grab market share, but yeah, numbers were still way down.
And political resentment grew towards ongoing airline aid, while other sectors suffered.
Became contentious. Why bail out airlines again when hotels, restaurants, small businesses were hurting without the same level of direct help? Fairness questions arose.
And the united front among airline CEOs started cracking over a second aid round.
Yeah, their individual situations differed. Consensus on what was needed and on what terms began to break down.
Goldman had that creative idea for American. Use the logo, the AidVantage program, as collateral.
Shows the extreme measures being considered. Monetizing intangible assets like brand loyalty to raise cash. Resourceful thinking.
And American did use AidVantage to secure a government loan. Then Goldman said, take that approval to the private market.
Strategic move. Use the government's backing as validation to potentially get better terms from private lenders. Leverage the government nod.
Meanwhile, online trading surged, market rebounded fiercely, shortest bear market ever ended by August, but gains weren't even.
Right, fueled by retail investors, Fed liquidity. But recovery was very uneven, disproportionately benefiting wealthier folks, big corporations.
American CFO Derek Kerr kept scrambling for cash, mortgaging the frequent flyer program, maybe even the logo, then did a stock sale.
Relentless fundraising, exploring every option. The stock sale capitalized on that improved market sentiment to bolster their cash. Strategic timing.
Hoffman links the rise of retail investors, meme stocks, to political populism. An interesting parallel.
Yeah, individual investors challenging the establishment using online communities. Mirrored anti-establishment political trends. A shift in power dynamics, maybe.
And her observation, consumer capitalism, even in a pandemic, finds a way.
Great line. Speaks to the market's adaptability, finding new paths even amidst massive disruption, resilience of consumer economies.
Okay, final section before we wrap. Lingering challenges and the road ahead. Doug Parker committing to pay furloughed workers through Christmas after aid ran out.
Showed responsibility, highlighted the human cost, supporting staff despite financial strain and uncertainty about more government help.
But that uncertainty was real. Trump delaying signing the next relief bill left airlines hanging.
Huge anxiety for industries reliant on that aid, left them very vulnerable financially while waiting on political decisions.
Bill Ackman, circling back, made another successful bet this time against long-term interest rates.
Yeah, anticipating the Fed's eventual policy shift due to inflation shows his adaptability, profiting from the changing landscape after his initial bearish call. Dynamic market.
And the Great Resignation. Massive shift from high unemployment to labor shortages, rising wages.
Pandemic really triggered a rethink for many people about work, life, priorities. Led to major labor market reshuffling, more power to employees in some areas, significant change.
And finally, Jim Farley's battlefield promotion to Ford CEO. Pandemic accelerating leadership changes.
Seems the crisis sped things up. Boards looked for leaders suited for the new, uncertain reality, accelerating succession plans in some cases.
So wrapping this up, what's the big picture from Crash Landing? It's just this incredible, vivid look at unprecedented disruption, isn't it?
Totally. Shows how fast norms shattered, the immense challenges leaders faced, and how the pandemic exposed those deep vulnerabilities in the economy and society.
It really underscores fragility, the speed of change. But also resilience, right?
Absolutely. The importance of financial buffers, adaptability. And moments of innovation, like Ford making ventilators. Crisis can spark resourcefulness.
So here's where it gets really interesting for listeners. Thinking about the takeaways, it makes you consider the shock absorbers in your own life, right?
Mm-hmm.
Personal finances, preparedness.
And the resilience of the systems around us. How ready are we individually, collectively, for the next big shock? What resilience can we build?
This deep dive really gives you a lens to think about uncertainty, risk, adaptability in your own world. It pushes you to look beyond the surface.
Definitely. It highlights that need for critical thinking about potential vulnerabilities, even when things seem stable.
Okay, so for a final provocative thought to leave everyone with, we saw the rapid market rebound, the great resignation. What are the lasting shifts here? Between companies, employees, the economy? Is this just a bounce back, or have things fundamentally changed about work stability, economic relationships?
That's the big question, isn't it? A temporary blip or a whole new landscape? For more nuance on that, definitely check out Liz Hoffman's full book, Crash Landing. It offers incredible depth on this transformative period.